Great. Greetings. Welcome to the fourth part of the 10-part training for UN Trust Fund organizations receiving grants from the UN Trust Fund. Today's session is on financial management of your UN Trust Fund grant. The session will be about less than an hour, and then you'll be able to ask any questions at the end. So I'm now going to share the presentation, which you should have also received in an email. So at the end of this session, the intention of this session is that you understand how to apply the UN Trust Fund and UN Women, therefore, financial rules and procedures, as well as specifically how to track your finances for the project, review and control the finances for your project, with the end goal of producing a satisfactory financial report, which is required from the UN Trust Fund every 6 months. And the key activities in this financial management are proper record keeping of the payments that you make, record keeping and periodic financial summary preparation and periodic performance review of your finances. For many of you who have been familiar with financial management of your projects for many years, this will all be familiar to you, but we do have some quite specific rules on things like records management that we need to share with you. So in terms of an overview of the elements of financial management of the UN Trust Fund grant, we break this down into tracking your expenses and how to do that for the Trust Fund grant, how to review and manage your expenses, and how to control them. And the importance of financial reporting to us is that as a grantee, you are accountable for the funds that are entrusted to you to deliver the results you've committed to deliver when you sign the agreement in the Trust Fund. And the financial report is a document that will help satisfy that compliance of accountability to us as the donor. And the financial report should help you and us monitor and in some cases improve the efficiency and effectiveness of the financial management and implementation of your project, as it should allow you to review your expenses against your budget and therefore plan for the future and make any necessary adjustments. And at the heart of this financial reporting, there are 3 very basic but important tasks, as I said: tracking your expenses, reviewing your expenses, and controlling your expenses. In terms of tracking throughout the cycle of your project, we ask that you diligently record all of your expenditures and expenses in an accounting system. Many of you will have an accounting system already. That could be as simple as an Excel spreadsheet, or perhaps you have a full-blown accounting system, and it doesn't matter which. It depends on the ability of your organization. Excel is fine, as long as all expenses are recorded and tracked against the approved budget and work plan. For many of you, you're probably tracking expenses routinely every month and reconciling your accounts every month, so this won't be new to you. For some of you, you may not be used to the extent of detail that we will ask for. So it's important that you record this presentation and see whether you're recording your finances to the extent that we require. Reviewing your expenses requires good record keeping. This means that you should always keep the supporting and other key documents for your expenses. Keep them organized in a filing system that facilitates reporting and expense verification. And as part of the review of documents, i.e. the review of, say, invoices or receipts or payment vouchers, you can then prepare a periodic summary of your expenses to determine your financial performance and status. So for every payment that you record, we would expect you to have a record for that payment. This will help you control your finances. So by controlling your expenditures, this means reviewing your expenditure against your budget to make sure you're on track not to under or overexpend to too much extent. And it can help you identify any problems in implementation. You are expected to control your expenses, and for that, you need an internal control system in the form of a financial and operational manual. Now, when we approved the grant, most of you would have had your finance and operation manuals already reviewed by UN Women or the Trust Fund, but some of you may have been asked to put in place finance and operational manuals, or to ensure that gaps in those manuals are fulfilled. So hopefully you know that already if you do need to take action. If you're not sure if you need to take action, then please ask your portfolio manager. So what do you have on hand to help you with all of this? Well, this session is going to help you in this tracking, reviewing, and controlling your expenditure. And we also want to remind you that all of these requirements are set out in the Project Cooperation Agreement or the Grant Agreement. So just as we talked about in session 1, nothing should be too new to you if you've read your Project Cooperation Agreement. So read that carefully, and all the rules are there. Another item that will help you is, of course, your annual work plans and your results and resources framework. So you've already budgeted for each of your activities, right down to level of detail of budget type, expenditure type, and we will keep referring back to that work plan and the results and resources framework, and you'll have an opportunity to review those annually. That work plan and the results and resources framework are all on the grants management system. So if you, as a finance officer or as a project focal point, do not have access to this system, please do ask us. You can have up to 5 people in your team given access. So if you do want to give access to, say, the finance staff in your team, as well as the project coordinators, we can do that. We can give access to more than 1 or 2 people. And obviously the key tool and resource you have is your own accounting system and your own financial rules and regulations, which, as I said, that we did review before giving you the grant, and any gaps are hopefully identified for you to fill. We have a whole list of guidance documents to share with you. I already sent you yesterday the grantee manual, which sets out the basic rules for financial management. But we also have additional guidance on records management, on procurement, on micro-purchasing. So we will send you that, and it's also on our extranet page, a website dedicated for you. And if any doubts, just ask your portfolio manager. So they're always there for you if you have any questions, if you're in doubt. So talking about each of these tools in more detail, as I mentioned, the Project Cooperation Agreement does contain everything that you need to do in terms of your financial accountability. The grant agreement is the contractual agreement between ourselves and you, so it's very important that you understand that grant agreement and that you can comply with it, because it does set out the very specific items in regards to financial management and control. It sets out specifically on the duration of the project agreement, which is, say, for example, from 1st of September of this year until 30th of August 2021, which seems like a long way off, but it will come around quickly. And in terms of finances, this means you can't charge anything to the project that occurred before or after the project. That might seem obvious, but obviously that means if you incurred some expenditure before 1st of September 2018 on the project, unfortunately you cannot charge that to the project. And any expenses that occur after, say, 30th of August 2021, you will not be able to charge, apart from in the case of the external evaluation, which does happen after the project date ends. Article 8 sets out the disbursements. So you will have received a list of when your annual disbursements will be sent to you. So each of you have a set amount for your grant, and we have agreed according to your budget how much you will receive every year. And it also includes the prerequisites for disbursement of the next chance and the minimum delivery rate, which is 80%. So you have to spend 80% of your first tranche, of each tranche, before you will receive the next. Article 9 sets out the importance of maintaining records. You must maintain adequate supporting documents for all expenditures, and I will talk that through. And Article 10 will set out when your reports are due, which every 6 months. Basically, every 6 months you will be expected to do a financial report. Finally, Article 11 sets out audit requirements, and we will have a separate module on audit. You may or may not be audited. Audits are decided on a risk basis. So, for example, if we find during your financial reporting that there are significant gaps in your record keeping, we may well identify your project for an audit. But if there are no errors, it may not happen, or it may do if we consider the project at high risk. It's chance, basically, audit. So moving on to your results and resources framework, which has the annual work plan and your budgets. So you've already told us what you expect to spend. You've told us your budget for year per activity. So we will all use that as the primary guide. So it's important that your internal systems reconcile with this project work plan and budget. So if you do have separate spreadsheets internally, do make sure that they all reconcile with the plan, work plan and budget for the project in the results framework that will be in the grants management system. We all have to work to the same budget. If you need to make changes through the year to your budget, we do allow variances. Since the budget is only an estimate, we will allow variances up to 20% for each project activity without prior approval, except for those budget categories with percentage ceilings, such as personnel, indirect costs, self-care and core, which cannot be exceeded. So you can't do any variances on, say, management costs, but for anything else, if you need to reallocate up to 20% of a project activity to something else, you can do so without our approval during the year. You just have to make a note of it, and you could also make a note of it in your financial report to us. So an example could be that you've budgeted $10,000 for training of some project beneficiaries, and you realize that, say, you actually need to spend not 10,000 but 11,000. Now that's under 20%. So we would of that project activity. So you can go ahead and find that, say, $1,000 more for another project activity, as long as that's again 20% or less of the other project activity. So you are allowed to make variances of 20% or less between activity lines. If you need to make anything over 20%, so if that project activity that was budgeted at 10,000 was actually 15,000, then that's obviously much more than 20%. So you would have to come to your portfolio manager and ask just by email first. So we will need to find additional resources elsewhere and explain where you will find those additional resources from a different budget line. And you can get that, and I will explain the process for that budget approval. So while we allow this flexibility at the project activity level, the actual total project cost is fixed. So you can never try and spend more than your total 3-year grant. And any unspent amount at the end of the project will be considered a saving, and it will not be released to you, or we will ask you to return any unspent funds. Likewise, if we find any ineligible expenses, we would ask you to return the funds. The next slide shows the results and resources framework. I mentioned this many times in the first few sessions. We have always been talking about the hierarchy of the project goal that comes from the outcomes, from changes at the output level, and so forth. But in today's session, we're switching this on its head, and we're talking about expenses, which is the cost estimates, which is the first step of the results framework. When we plan the project, the top of the pyramid represents the project goal normally, and we consider it that way. When we're talking about expenses, therefore, you have to make sure that every expense is linked to an activity on your results framework, and therefore an output, and therefore an outcome. Every activity, every budget needs to be linked to an activity. So in this case, in this pyramid, there have some expenses for a contract for a venue, travel expenses and materials, and this has been linked to an activity 1.11, a workshop on ending violence. And this workshop is going to contribute to output 1.1. So the results framework does this for you, but it's important when you're tracking your expenses that you always link that expense to an activity. In reality, this means, for example, when you receive an invoice or you receive a payment voucher or a receipt, that you mark on that receipt or invoice the activity in the results framework it's linked to. So that you can always identify what that activity, what that payment is linked to. This is important because we ask you to link all payments to project activities. So filing your documents for each payment by activity number will facilitate the preparation of your financial reports and also compliance with audits, because every expense must be attached to a project activity. If you're buying something in bulk, like materials, we know that they might actually contribute to several activities. So you might bulk buy flip charts and pens or whatever. In that case, you could split that cost between 3 activities. So you would mark on the invoice that 30%. A third of it would go to activity 1.1.1, a third of it would be 1.1.2, and so forth. So we're not asking you to, there are ways that you can make bulk buy and still split the cost across activities, but it must be clear how that division is made. And so a good way of doing it is to mark this on the invoices and receipts and documents, and keeping everything in the filing, which I'll make a suggestion of later. So everything has to be connected to a project activity. When it comes to reporting in the grants management system, the online tool, I will show you a live demonstration of the system in a future module on reporting. So we won't show you the system today, but we will in future. But we have a very standard template for financial reporting. And basically, it will ask you to report your expenditure per budget. And it will be in US dollars. Everything is in US dollars. GMS, the grants management system, will automatically track your financial delivery rate once you report your expenditure. And the second and subsequent funding installments would be advanced once the report has been found satisfactory and approved, and at least 80% delivery rate is achieved. So we will have a separate session on the reporting system. But just to say that it does do a lot of the calculations for you, and it calculates your delivery rate for you.
Support for WNYC comes from the Netflix original film Roma from Alfonso Cuarón.
So as I just go and put someone on mute. There we go. Hopefully you can still hear me. So on the next slide, we're talking about the timing of the reports. When will you have to report? Well, basically, it's every 6 months. This is a bit of a busy slide just to tell you that you will be expected to complete a financial report alongside a narrative and results report every 6 months. And every year, every 12th month, we will ask you to certify the financial report, which basically means printing it off, getting your executive director to sign the report. So every 6 months you will be asked to report, and then there will be a very final financial report at the very end of the project. And for each report, you have a month to complete it. So you report on the last 6 months or the last 12 months, and you'll have a month to complete it. And you should have a personalized list in your project cooperation agreement, so do look there. So financial reporting in GMS is part of this 6-monthly reporting, whether a progress report, which is every 6 months, or your at the 6-month point, and your annual report at the 12-month point, and the final report, which covers the whole of the project. And the purpose of the reporting for the finances is to tell us what you've spent against the approved budget. So the financial report covers exclusively the expenses incurred in the last 6 months, but then it will automatically calculate for you the annual expenditure, the total expenditure against your budget, and automatically calculate the delivery rate for you. And if you access the grants management system, I would recommend you do, you will find all the guidelines and the reporting guidelines attached to GMS, but we'll also be sending them to you and have a separate session on that. When you enter the expenditure into the system, you will be asked to do so by cut budget category and activity. So in the example at the bottom, you will see, let me get the annotate. So this is an example. And here you will see that they have, under key activity 1.1.1, they had a budget of travel for $287.34, and you'll have a space to enter your expenditure, which they've put as 0 in this case, and it will calculate the balance, what's remaining. So every time the grants management system is open, you will find a column where you can enter the expenditure. So it should be self-explanatory, but we will, of course, give you the full guidance and full training. Once you've completed the financial report, your portfolio manager and the finance officers here will read the report and will decide whether it is satisfactory or not, or whether you need to make any changes or clarifications. In terms of the internal controls that we mentioned, well, what do you need in place? You need your organization's guiding documents on finance. So we expect all organizations that we fund to have a finance manual, to have an operational manual, which should include financial rules and regulations and procurement. If you don't have these in place, you probably were told already during the grant approval stage, and it was identified as a gap that you need to fill. One thing that we've asked you to do to help you with this is the procurement questionnaire. If you haven't yet completed the procurement questionnaire, please do so, because that will help us identify whether your procurement guidelines match and meet our standards, and we can help you ensure that yours do. If you don't have your own financial manuals, you are welcome to follow ours and follow the UN Women's guidance. And for that, we have a lot of guidance notes for you. But we do prefer that you establish your own rules and regulations, and it will help your organization in the long run. So this might seem heavy-handed, but we have found that through the support to help particularly smaller organizations have financial rules and regulations and manuals in place, you are much more likely to be funded by another donor in the future. It will make your institution much more reliable for further donor support. So if you do have gaps, we do suggest you fill them. You must have your own established accounting system, whether that's Excel, QuickBooks, or another version. And you must be able to account for the UN Trust Fund project funds separately from other donor funds. So if your project is actually being funded by other donors as well as the UN Trust Fund, we will still expect you to account for the specific amounts that the UN Trust Fund give you for specific project activities. Going back to records management, as I said, you must keep accurate and up-to-date records and documents of all expenses incurred with the funds made available by the Trust Fund. These documents will be regularly verified by us to ensure the validity of transactions. We mentioned it, I think, in section 1, but we will do a 100% verification check of all your invoices, payments, and records at your first 6 months progress report. We will check all payments. Therefore, it's good to start this filing system now. You probably have your own methods, but if not, what we've suggested is that you start a filing system that, as you can see here, on the left, this is an example filing system where on your computer you have filing folders for each project activity. And so each project activity, you would be able to save your invoice. So here's an invoice for activity 1.1. You would have marked on that invoice when it was paid that it was for 1.1. And you would be able to save that in the right folder. So every time that you get a payment voucher, an invoice, or expenditure, you can scan and save the expense into the relevant folder. This will make it much more easy for you when you're doing your financial reporting, and much easier for us to verify payments and for an auditor if they come. So you can obviously scan the receipts. Electronic record-keeping systems should be designed to ensure that supporting documents are maintained in accessible electronic form as scanned copies of the original documents. However, the original paper-based copy must remain available for a minimum period of 4 years after project completion. So that's a minimum year of 4 years. We would expect the paper-based copies to be maintained. That would be in case of any further audit. The system for keeping all these financial records should be set up in a way that supporting documents are organized per the activity in the results framework. So number each document and name the electronic copy of this document with the same number or reference. Create a separate electronic folder for each period of reporting, so for each 6 months or each year. So you'll see in this example, they've labeled the folder as per the first 6 months for the first progress report, and then for the annual report for the full year, and so forth. Co-implementing partners must follow the same filing system. So if you're sub-granting and have co-implementing partners, they will have to do exactly the same. So I hope that's clear. If you've already got your own sort of system, you can always check that with your portfolio manager to see if it meets these needs. So what do we mean by records? What do we mean by supporting documents? Well, the type of supporting document depends on the type of expense. We could mean receipts, payment vouchers, invoices to support purchase of goods. So we have some examples here. So invoices, receipts, or proof of payment, payment receipts for personnel, timesheets, or contracts for staff with specific deliverables and deadlines. Could mean cleared checks or your petty cash log if you're using cash. So there's a variety of types of supporting documents. The example presented here is for the recruitment of a consultant. So if you're recruiting a consultant during your project to complete a project activity, you would also need evidence that you did the procurement process in a rigorous way, in accordance with procurement guidelines of your office. So in this example, recruitment of a consultant, we would expect to see on file, as well as the payment down the later stage, Also, the job description for the consultant, proof of advertisement, the assessment of the candidates for the job, such as CVs, the written test, anything that shows, a matrix shows how you selected the final candidate, reference checks, final decisions, proof of funding, the consultancy contract. So basically the whole journey. So ensure that everything that you file tells the story of how you, for example, recruited that consultant in accordance to your procurement guidelines. And put all this evidence in a folder as one package. So maybe it was everything under one activity, but you would have quite a lot of documents to show the journey. So your supporting documents not only need to show the proof of the payment, but also proof that you fulfilled, say, the procurement guidelines. And we will talk more in the operational module next week on things like audit. Moving on. And we give you a supporting documents template. So every 6 months when you report, you can complete this template for all the supporting documents that we request. So this will only be for when we request documents. For the first 6 months, we will do a 100% verification check of your supporting documents. So you might as well start keeping a template like this now, where you would be recording per activity the document reference number, the expense details, and how much was spent. And maybe it would be good practice for you for every period to keep a document like this if you wish. So in the template, if we ask you for supporting documents, we will ask you to put the activity, send us the document. We'll give you a transfer, a Dropbox folder or a WeTransfer link to send us the documents, but each would have to have a reference number, date of the payment, the details of the expense, the currency, the conversion into US dollars, and any comments. So this is, we have sent it to you yesterday. And the information on this template should reconcile with the financial report that you submit in the grants management system. It can track your expenses in both US dollars and local currency with a clear indication of the exchange rate used. If your bank account is in local currency, the rate of exchange at date of receipt of the first grant installment should be used for calculation. So when we're talking about conversion from local currency to US dollars, you would be using the exchange rate in which you received that first grant installment if your bank account is in local currency. If your bank account is in US dollars, the real-time exchange rates on the days of transaction or bank withdrawals can be used when converting expenditures back to US dollars, because then it would reconcile with your bank account in US dollars. So basically, keep all your documents and use a spreadsheet like this to track them, and we will ask you to send us the supporting documents along with this template if we ask for it at each reporting stage. Next slide. So what is eligibility? When we talk about expenses, it's important to point out the criteria that we use to determine eligibility. And you will, at the beginning when you got our grant, also have received our budget guidelines in terms of what is an eligible cost and what is not. Expenses that are eligible have to be an actual cost to the organization. That means anything that's planned. So you could only charge the budget what's been planned, for example, in your results and resources framework. The planned or budget costs may or may not be equal to the actual cost. We understand that sometimes there will be fluctuations, but it has to be something that's actually been planned and generated by approved activities. Payment to staff or consultants must be supported by timesheets that have been approved or verified by the authorized officer in the organization. Similarly, advances for services which have not yet been received should be reported in the financial report. For example, if you are working with a partner and have sub-granted advance funds, this sub-grant should not be included in the financial report until after you have received the supporting documents from the partner and cleared the advance, as the financial report is cash-based and not accruals-based. The only exception for that will be the end of the project for the final external project evaluation. In this case, the organization may include incurred expenses related to the final elevation in the final financial report. And we can get back to you on that closer to the time. So actual costs. So we're cash-based, not accrual-based. And it must be something that was generated by the approved activities in your project budget. So coming back to the point on variations, you can, of course, make variations up to 20%. But if you came up with something completely new, a completely new project activity, you would have to come to your portfolio manager for approval before incurring any expenses, because that may require a project modification. You can't go ahead and decide to do a completely new project activity without coming to us for approval, because you'd be in danger of that being not allowed in your financial report. Everything must be attached to a project activity, and everything must have incurred during the implementation period of the project and in the implementation period of the financial report. Everything must be identifiable and verifiable through the documentation that we ask for. So you must have supporting documents. If you don't have supporting documents, we may have to call that ineligible and ask for that money back. So if you have any issues with getting project receipts for things, and we know that can be a challenge in some environments, talk to us first. So we know that in some cases getting a bus receipt or a taxi receipt can be very, very challenging. Maybe there are in some rural areas you hardly ever get a receipt for certain items, but there are ways around this to document expenses. So do ask your portfolio manager. And all the expenditure has to be reasonably justified and comply with your sound financial management. So as I said, everything should comply with your financial rules and regulations, procurement guidelines, and such. We do allow variances, but they would have to be reasonably justified. So those are the basic criteria for eligibility, but obviously we also have that list of specific items we will and will not allow in the project budget. And do take care over this, because if you end up reporting something in your financial report which is ineligible, we may have to ask for that money back. So if in doubt, come and ask. Cash. Cash payments are generally discouraged. Payments in cash to suppliers of goods and services have been very strongly discouraged by our auditors. We know in certain contexts, banking facilities may be limited, but it is essential that any cash payment is adequately documented to provide additional audit trail. And all cash payments throughout the period of your project will be subject to verification. So if we see any cash payments in any project report, we will ask for the documentation, whereas for other payments, we may or may not ask for verification. You can set up a small petty cash fund, which must be established for administrating small cash payments for small expenses, because we do know that there will sometimes be the need for small cash expenses. And we have a whole guidance note on management of your petty cash, but we do discourage it. Slide 17 is about what if you need your money at a different time than the annual. Off-cycle disbursements is just a fancy word for saying, what if normally we give your installments once a year, but what if for whatever reason you didn't spend enough in year one and you end up spending your tranche by 18 months, and at that 18-month point you need your installments, and that's before the second year. is up. So you can request disbursements of your next installment at other times other than the normal annual, but there are certain rules for this. So for example, if you only spent 75% of your first year's installment in year 1, we would ask you to wait and let us know when you'd reached 80%. And then we would do what's called an off-cycle disbursement, where you would be able to complete the report earlier than normal and let us know that you've now spent 80%, so that we can potentially give you the second disbursement. But there are certain rules. You would have to have more than 40 days left before the next report. So if it was 40 days before the next report was due, we would just ask you to wait until the next report, just to save everybody paperwork. And obviously, you always have to spend that 80%. It's not eligible in the first year, so if you find you're overspending, if you've spent 120% of your first installment by July next year, we can't give you your second year installment. It's not eligible. And also, again, if you're overspending and already received the tranche for the current year, we can't give you the second tranche immediately. So do take care to try and keep to those annual disbursements and 80% delivery rates. But we do have methods to give you the next installment at off-cycle moments. And in these cases, there is a template to request an off-cycle disbursement, which is similar to a regular financial report, but it gives you a separate column. So as I said, if you found this year, in the year 1, that you don't spend 80% and you have to wait until October or November next year, and suddenly you've reached 80%, we would open up a new report and get you to complete your expenditure in a new report, and then we would be able to release the next tranche, as long as it wasn't 40 days before the next report is due. This might seem a lot of information. Don't worry, we will repeat all of this if you ever have any, if you ever come to this. But it's just to say, yes, don't worry. If you don't spend 80% straight away, we will be able to give you the next installment at a stage that's appropriate. What if you want to make budget modifications that are over 20%? Well, that is fine as long as you come to us for approval. Because if you end up spending more than 20% on a project activity, and that turns up in your financial report and it hasn't been approved, we may consider that ineligible and ask for the money back. Ideally, you would wait until to do the annual review of your budget, which is once a year, and you would do that with your portfolio manager. Budget modification is the reallocation of available funds for the current implementation year across existing budget lines or activities, or even to create new budget lines if you create a new activities. And these available funds would have to come from that annual budget in the current year, or any unspent funding potentially from the previous year. We ask that you only make major budget modifications once or twice a year, and ideally you would just wait till the end of the year for the next year. The grantee will not be allowed to reallocate budget for past or future years. So if you'd like to reallocate budget for a future year, you would need to raise a new project modification request at the beginning of that implementation year. And as per the off-cycle, you can only ask for project modifications no later than 40 days before the submission of if a report is due. So if you were 40 days before the next progress or annual report was due, we would ask you to wait until that report to do the budget modification. Again, it's important to understand that you can't make any changes to budget lines, activity lines that have ceilings, percentage ceilings, such as personnel, indirect costs, and so forth. But if you make savings on these lines, you can reallocate them. You just cannot exceed them. So if you do want to make a budget modification that's above 20% of an activity line, here is the workflow process. And it always starts with just contacting your portfolio manager, send them an email, and discuss the details of the needed modification. And then you will be asked to write a formal request. And I sent you the template for that in the email yesterday. The UN Trust Fund Portfolio Manager will review the request, may ask to get further verification, but once it's approved, we will reopen the budget system and open it up for the project modification, and you can actually do it on the online system. So that's the process for budget modification. So we're close to the end of the presentation now. To summarize then, in terms of your financial report, you will be tracking, in summary, your UN Trust Fund funding separately from other funding sources, separately from other donors who might be funding the project, and that you should be keeping all your accurate bank records and documents. You must ensure that when you're spending funds, make sure that the money is eligible. It is project activity related. It's within the budget, or you've asked for a budget modification if needed. You must ensure that you're adhering to your financial rules and regulations. And critically, you must be recording and saving all supporting documents according to activity and date. So that's the summary. And this is just an example of how you would do this for one item. So say that you've received $50,000 from the UN Trust Fund for a grant. You would be recording that income as an advance in your bank account separately from any other donor funds. When it comes to spending money, for example, if you're spending money on a baseline study, you'd be marking that as Activity 2 M&E baseline study, and you would be saving all the documentation related to that study. You would have on file the terms of reference for the study, the request for proposals, the quotes from the people who applied to do the study. You would have on file proof of the competitive selection. You would have on file the contract award, and then when you make payments, you would have on file the invoices and the payment vouchers and proof of payment. So what happens when you come to the end of your project? Well, it seems a long way off, but we will ask for a certified final financial report as well as your final narrative and results report no later than 1 month after the project ends. And that will cover the entire project in terms of the narrative, but the financial report will cover the last 6 months. In addition, you will be asked to have a report on the assets you've acquired. So do keep a record of any assets, any equipment, and so forth. Until the project ends, those assets are owned, in theory, by the UN Trust Fund, but we will transfer formally the assets to your ownership at the end of the project through an asset transfer request. So if you were purchasing assets such as major pieces of equipment, you will need to keep a record of that. And the final payment is also subject for large grantees only of the satisfactory final evaluation report. So do remember that that final payment is subject to receiving that evaluation report, and that's due within 2 months after the end of the project. So that's right at the end of the project. And then when we look at your financial report, we will ask for any money that's not been spent to be returned to us. And we don't give no cost extensions, so we won't be able to extend the project. To summarize before we close, what's some best practice then? And I'm sure many of you doing this. Keep monthly records of your expenditure and reconcile those accounts and discuss your monthly summary of expenditure to your budget within your team. And you might have your own Excel or accounting systems to do that for you. Make sure you're keeping all your supporting documents filed well according to project activity. And make sure you have these adequate internal controls in place. For example, proper segregations of duties, making sure you have procedures for comparing actual expenditure with budget. So what does this mean in practice? It means in your organization, it should never be, for example, the project coordinator doing the financial report and signing it off. You have to have a level of segregation of duties where, say, the financial officer is doing the report and it is signed off and checked by the project coordinator and then by the executive director. You should also have, obviously, all your financial management rules and regulations in place or be using UN Women's. And if you're subgranting, all of this is also relevant to your subgrantees. They have to follow the same rules. And it's your responsibility as the primary grantee to be monitoring that the subgrantees are doing the same and keeping the supporting documents. So that's the end of the financial management section. So well done for getting through that. And now I'm going to open up for any questions. And I will also see if we can get the financial staff online to introduce themselves. So I'm going to see if I can take Mildred off. Mildred, can you introduce yourself?
Yes, hello. Good morning. My name is Mildred Garcia. I'm part of the operations and finance team in the UN Trust Fund.
Wonderful, thank you. And maybe Tirilim, do you want to introduce yourself?
Yes, hi, I am Tirilim Katama. I am the finance associate and part of the operational team. Thank you.
Nadia?
Hello, everyone. My name is Nadia Krishuk. I am finance and operations analyst at the UN Trust Fund.
And Teresa?
Good morning, everybody. My name is Teresa Harris, and I assist on reviewing the budget and looking at supporting documents.
Wonderful. So we have a whole fantastic team. So what I suggest is, Mildred, do you want to lead on answering the questions?
Yes, sure.
Can you read them there in the...
Actually, I cannot. Let me see. 1 second.
I can read them aloud if you...
I'm afraid I cannot see it, Gemma.
Okay. I'll read it.
Other team members, can you see the questions?
I can see it, yes, and I can answer.
Okay. Go ahead, Nadia.
So I see a question from Anthony. First question is, how does one file support documents that have been shared across activities? So if the receipts are related to transactions are related to several activities, then you need to have a copy of the supporting documents saved in both activity folders. So, but then on the supporting document, you should mark what percentage of this transaction is attributable to the specific activity. So say if it is a consultancy for $100 and $50 related to activity 1 and 50 to activity 2, you would file 2 identical copies in both activities, marking that 50% is attributable to activity 1 and 50 to activity 2, but it will be the same supporting document. So, and the second question is, must you maintain funds and operate the funds in one separate account? Yes, ideally, you would have a separate bank account for a UNTF project. But if you have a way to reconcile your bank account and separate our funds from other donor funds in your financial system, you are permitted to do that as long as you can report on funds only related only received from UN Trust Fund. Then you can combine. But for simplicity, we suggest to have one dedicated bank account to our project. Then what if you have an accounting system that can be used to identify the funds? How about shared costs that are proportional to the grant? Yes, if you can separate, then go ahead. Please use your accounting system, and shared cost apportion to the grant. That has to be well documented. So percentages have to be indicated in all supporting documents. Then for the personnel costs, we strongly suggest to have timesheets. Actually, it results frequently in audit findings if there are no timesheets, because each transaction needs to be supported by an evidence. So if staff dedicates 80% of its time to UNTF activities, you need to have a timesheet that would indicate that from 9 in the morning till 3 p.m. That staff was working on UNTF activities. So that's one of the audit requirements. So yes, so all the shared costs, they have to be indicated on the supporting documents as percentages. I don't see any other questions. If you have any more questions, please write them in the chat box.
May I also add something in regards to the first question, Gemma?
Yes, please, just both of you take the lead. That's fine.
I'm sorry. On regards on the filing, and just to add another example, for example, if you have a consultancy also that is going to split the costs between two activities, that needs to be also outlined in the TORs, in the terms of reference of that consultancy. It's not, remember, when you go through an audit process, the auditor needs to understand the logic of that expenditure. So if an activity is split between, let's say a consultant is providing services to two different activities, that also needs to be spelled out in the terms of reference. And that's what the auditor will check, of course. The auditor will check the terms of references, see what the consultants, what is the service that that consultant will provide to what activity, and then, of course, you will file that, as Nadia has mentioned, in both activities. So just make sure that you have, all the evidence, and that you can provide all the evidence how you organize the information.
Hi, Gemma. I will also add a point to the first question, Trollem.
Go ahead.
So, in regard to the first question, when you have multiple activities supported by one document, in addition to the percentage, you need also to refer where you have the original document, because when the auditors come, they will not accept copies. So, for example, if you keep the original under activity 111 and copies under activity 112, you need to put a note on the copy of the document that says the original is under activity 111. That's it. Thank you.
I think there are two additional questions.
Yes, I just want to say, if everyone, when they're sending their question, you can either choose to send it to me privately or to the whole group. If you could make sure to send it to the whole group. I've just copied and pasted a couple that were to private. But yeah, make sure there's a drop down. You can click down and choose whether to send your chat message to everyone or just to me, and please send it to everyone. Okay, so the next question, Mildred and Nadia, is then, there is one from, I just copied and pasted from Colleen about cash payments, if you can see that.
Cash payment.
It's from me, but I copied and pasted it. Oh no, sorry, the next one is from Answer to Everyone on whether consultants that directly implement the project require timesheets.
Okay. Gemma, Tiralen, Nadia, do you want to answer or do you want me to answer? Please go ahead.
Yes, okay. So this is Nadia. Consultants, there should be an evidence that of deliverables. So if consultant is paid hourly, yes, you would have you would need to specify how many hours to spend for the project by the consultant, just as part of payment certification, but also you would need to have an evidence of deliverables. So if a consultant is hired to administer training, you would need to have an evidence that the training took place and the participants attended the training. If a consultancy is to design something, you would need to have an evidence that maybe a picture of what has been designed. But if the consultancy is based on not deliverables but the hours spent, then you would have of course you would need to demonstrate that you are actually paying for the hours spent on the project.
So basically, what's required for consultants is a delivery report, which is that specifies the activities delivered by the consultant, and it will be initiated by the consultant. Then the consultant will sign that, and your approval, also the organization approval or stamp or signature should be there. So the delivery report will suffice. That's it. Mildred, if you want to add more.
Yes, I think just to add that, yes, the delivery report will suffice if the consultancy is against an output, a specific output of the project. If the consultant, for example, you hire a consultant to provide services in the M&E activity, for example, that person would do routinary activity throughout the project implementation, so that you will need to provide a time sheet for that consultant who is providing service on the M&E activity. So it depends on what type of consultancy, what is the service that that person is providing. So I trust that's clear. If not, please let us know.
Thank you. So the next question is also from Anthony, and it asks, can we submit organizational audit reports, and can this cost be charged to the project?
Yes, thank you for that. I will answer that question, and the answer is no. You may not charge audit cost to the project unless it is an audit that is carried out by us, by UN Women. You can please read the PCA article 11, which is the audit requirements, and it's very clear there how is the audit process, and we will also have a training on, I think it's the next training on audit. You may still have your own audit, internal audit, but that cannot be charged to our project. If you are selected for audit, we will let you know what is the process and the cost that should be charged against the audit budget. And please just make sure that you understand the PCA requirements, the audit requirements, which is again outlined in Article 11 of the PCA.
Thank you. The next question from Jonathan is to clarify of the variance of 20% of project activity level. Does this imply that individual line items within the project activity may have variances greater than 20% without approval for change? I presume that means, yeah, each individual budget category line within a project activity. Can there be variances? Does that make sense?
Yes, Mr. Alim. So yes, that is yes, but when we allow them to overspend in one budget line, they must justify that. They must justify in the budget narrative why they overspent in that specific budget line. And they must always, the grantee must always have other projects in mind where they will fund that amount. So that is yes, but it must be justified, well justified.
But just to clarify, colleagues, is that the 20% refers to one activity line. It doesn't refer to budget lines. It refers to the activity line. So again, we encourage you to read the financial operation arrangements in the PCA number 2, which is it specifies very clearly that you may not exceed 20% of one activity line. So in that, let's say, for example, that in one activity line you have 6 or 7 sub-categories, sub-budget lines. You may not exceed 20% over that activity line. So it's not for every budget category, it's by activity line.
Thank you. And when Tiralem said that you can justify it, but she means within the financial reports, every 6 months you will be able to explain anything at that 6-month stage. Just to warn you, Mildred, Nadia, and my computer is patching. God, I'm worried that my computer might shut off. Let's see if I can move. Anyway, keep going, and I'm going to see if I can pass the host to someone. The next question is from Colleen on the cash-based. Can someone answer that one?
Yes, I can take that. This is Nadia. So yes, we discourage generally, well, let me read the question first for everyone. So I'm certain that many countries also have the same challenge. Many local economies are cash-based, and being forced to use only non-cash payments often means not using local services or products. This is discouraged by UNCF. Is there any way we can manage this to respect UNCF guidelines while also supporting the local economy where the project is? Yes, while we discourage it, it's still possible, but it will be 100% verified, and the proper documentation needs to be maintained. So you would need to be extra diligent in recording all journey of the transaction. Procurement side, how the supplier was selected, was it the cheapest service possible for best value for money, and then later at the payment stage you also need to document it really well that the funds exchange happened, that whoever receives the funds needs to sign the document, and it has to be very clear to us. And there are also, you cannot do this with regards to large transactions. So if it's above 500, I would even say I would need to verify, but I think that our policy is 100. Please correct Tiralem if I'm wrong. For cash payments, not to exceed $100, but we will confirm the threshold exactly. Tiralem, can you correct me? Is it $100 or $500 for cash?
It depends on the organization, but for this specific question, I would rather recommend those grantees who have such challenge to individually contact their portfolio manager, because we strongly discourage non-cash payments. It is also in the grant agreement, so I would recommend those grantees who have such challenges to directly contact their portfolio managers before start using cash payments. Mildred?
Yes, in addition to that, please, colleagues, note that we will share a petty cash guidance note, which clearly outlines what is established petty cash threshold, which for the UN Trust Fund is $500 maximum per month. So, but again, and we do encourage, as Tiralem said, to speak with your portfolio manager before you start doing cash transactions. We are here to help you and to support you through the implementation. So together with your portfolio manager, we will have to discuss the best way to solve in case you need to do some cash transactions, just to make sure that you understand the process and that you have enough supporting documents to support those expenditures. So please, like Tirolene said, please contact your portfolio manager in case this is an issue for your project.
Thank you, Mildred. I did pass, in case my computer shuts off, because it says it's passing, I moved the hosting to you, Mildred.
Okay, great.
Just in case. There was another question on cash, but I think that's covered. The cash, yes, cash could be spent on anything, transports per diems, but as you said, we have a strict policy on cash, so please contact your portfolio manager. So the next question is from Anthony about foreign exchange rates. Anthony's organization's policy says to use the monthly exchange rate, monthly average rate for transactions. So what should they do? Oh yes, Nadia's responded, Anthony, if you could confirm whether your bank account is in US dollars or local currency, because it depends on that. And then we can answer the question.
Yes, thank you, Nadia.
Well, let me answer in general. If your bank account is in local currency, then at the receipt of our funds, you document that exchange rate and use that exchange rate for reporting, for converting transactions back in USD when you report on your financial reports. If your bank account is in USD, so you receive our funds as US dollars, then you would have to use the real-time exchange rate at the date of the transactions when all withdrawals take place. So you would have to, in that supporting document template, the Excel template that we shared with you separately, you would have to log in the transaction on the date of withdrawal or on the date of transaction. You would have to document the exchange rate so that later, at a later stage of the reporting, you can convert it back to USD using those exchange rates individually. I hope this is clear.
Well, Anthony's replied that they maintain both accounts, but I'm not sure if that helps answer the question.
If you have two accounts, so you receive the funds as USD, but then later you transfer it to your local currency bank account, then you would use the exchange rate of the transfer, because that's when the conversion happens, and that's the exchange rate you will use when you change when you report and convert back to USD. I hope this is clear.
Yes. Any more questions?
Yes, there's another from Andrew. If a consultant is paid on a monthly basis for deliverables under the project, would that require a timesheet as well as a delivery report? No, not if it's monthly, right?
No. If there are specific deliverables for the consultant, the report will suffice. But if that consultant is the service that consultant is providing is more or less like a staff, a member of the organization, that you will need to provide a timesheet for that. And the best example that I can have on this is, for example, if you hire M&E expert for the project implementation, right? That person is not a staff member, but it will provide services on this specific area. So for that person who is a consultant working for the project for a period of 2 years, probably, you will have to provide timesheets for these consultants.
Thank you. So it seems to have slowed down a bit now. Has anyone got any more questions? And we do, if you read the manual and if you read the guidance notes, there will be hopefully many answers to your questions in the documentation as well. And yeah, you can always email us at any time with questions.
I think, Gemma, I just want to stress that we encourage all of team members to review the PCA and review the basic articles that are really important in terms of implementation and finance. And if you need you know, help understanding some of the clauses of the PCA, we are here to help you. But it's really important that all team members understand the financial and operational arrangements, the maintenance of records, reporting requirements, and also the audit requirements. All of this information is outlined in the PCA and is also outlined in the Grantees Handbook, which we will share with you along with guidance notes. So any additional questions that you may have, we are also here to support you through the implementation. So please feel free to send questions to Gemma or to us directly.
Great, thank you. Yes, first point of call for questions is your portfolio manager. There will be your
yes, sorry.
First point. Okay, well, unless there's any more questions, we can close the session. So have a think. Is there anything burning? We've still got 10 minutes to go, but we can finish early if there aren't any more questions. Does Mildred, Nadia, Tirilim, Teresa, anyone have anything else to say? No? Okay, great. Well, thank you very much. And just a reminder for those who haven't completed their procurement questionnaire to please do send it, because that will help also for you to review our requirements and as a checklist against which you can review your own procurement guidelines. Oh, there's a last question from Cambodia. Hi, Cambodia. The Cambodia has asked the remaining budget or unspent amounts of a budget for year 1, for example, of 15%, can it be carried over to year 2? Yes, I believe yes. Budget is always carried over. Nadia?
Yes. It will be recorded in the system as funds available at the beginning of the second year. Yes, so it will be added to the budget of the second year.
Okay, thank you. Okay, I will say goodbye to everyone now, but yes, you can email questions after this to your portfolio manager, and we will send you further guidance notes and give you access to everything that you need. So thank you very much to everyone for joining. Good luck with your projects, and we look forward to seeing you same time next week, specifically on audit. And that will actually lead very much on from this session. So if you had any unanswered questions, or if you read the manuals before next week and come with more questions, it will be the same people online next week to answer those. Okay, thank you very much, everyone. Goodbye. Goodbye, everyone. Have a good week.
Thank you, everyone.
Thank you.